Okay, connecting. All right, it looks like we are live. Let me get this tweeted out here so more folks can join in. Awesome, awesome, awesome. Now, where did that go? Okay, so that's right over here. Good stuff. All right, well, it looks like things are starting to come through here. Good, good, good. Can everybody see okay? Let's make sure that the feed is coming through okay here. Everybody there okay? Hey, enlighten me. Can you see everything okay before we get started? Just want to make sure everything's coming through okay. Before we get going. Can everybody hear okay? Just checking in. Hey, Mike. Hey, guys. Everybody can hear? Okay, good, good, good. Everybody can see and hear? Fantastic. Well, good. All right. So thanks for tuning in, everybody, at this special time, 8 p.m. Eastern time, New York time. And really excited that we have Brian Shannon here tonight, CMT, and he's going to be talking about anchored VWAP tonight. So it's going to be a cool topic that we've never talked about before. And honestly, I'm really excited to learn about it as well. So this is going to be really awesome. So good stuff here. Before we get started, everything we're going to talk about today is as always, is for educational purposes only and not investment advice. So please take a moment to review this disclaimer. Awesome, awesome, awesome. So good. Let's just take a look real quick and see where we left off with the market on Friday. So I'm just going to pull up the SPX from Friday. We'll start with the monthly chart real quick. So far the monthly chart in February is pretty green, right? We hit an all-time high so far. And what an epic reversal last week. So we could see that the prior week, right, was looking really bearish. Recession was starting, all that stuff, and we pulled back down to the this support level right here, and then bounced right back off of it and pushed up, right, to fresh all-time highs last week. And then, but it did leave a little bit of an upper shadow, right? And then you can see here on the daily chart too that we basically put a lower shadow here the week before, right around the 50-day moving average, and then just did gap up, gap up, gap up, gap up to all-time highs. And then we left that little bit of a little bit of an upper doji right there, possible hanging man, and a red spinning top to finish on Friday, right? So right now the S&P futures, I believe, are a little bit down. So we'll see where that puts us tomorrow. But anything could happen between now and the morning. So we'll definitely be seeing how this all plays out on that. So good stuff. So tonight, again, we have special guest Brian Shannon, and he's the founder of alphatrends.net. Links to his website and to his book are in the Twitter description or in the YouTube description. So please have an opportunity to check those out. He's an online swing trading, does on-site swing trade analysis, and has a great community that he started back in 2010. Full-time trader, educator, and author of that book, Technical Analysis Using Multiple Timeframes, which is an amazing, I think, a revolutionary book to look at how things change over time and when we should start to change our mindset looking at the market. So he's also we'll have to talk about that in a minute, but possibly the inventor of the anchored VWAP. I'm not sure. We're going to find that out. But he's here tonight to share more information about the anchored VWAP, which I think is a real, every time I look at it, it seems like a really cool tool. We've talked about the VWAP a lot in the past, and this is going to give us a neat perspective on it as well. So tonight, without further ado, I present to you Brian Shannon. So let me just stop this share right here and switch it over to Brian.
Okay. Hey, everybody. Thanks for tuning in tonight here, and thanks for having me on, Bubble. Let's get started. What I'm going to do is I'm going to flip back and forth between a PowerPoint that I have here that will educate you about, and I'm going to talk about some current market examples, and at the end I'm going to leave you with a couple of ideas that are set up for swing trades that you can act upon tomorrow. So let's get started. The anchored volume weighted average price. You've heard of the volume weighted average price. It's been around for a while, as since 1988 it was started as a institutional benchmark to measure how well orders were being executed on behalf of a customer. And I just started noticing it in about 2004, 2005 on this charting platform I was using at the time called Realtick. They allowed you to have if I looked at a chart of today, it would be today's VWAP. If I had a chart of the last 3 days, it would be wherever I started it at. Now, based on that, I started looking and really making a lot of observations about how price interacted with the volume weighted average price. And that is, how I started looking at it, saying, well, wouldn't it be cool if I could start a volume weighted average price from the moment the Federal Reserve announced something, or from that gap, 12 days ago. I could look at a 12-day chart and do that, but I then would have to look at a 5-day chart if I wanted to say a 5-day volume weighted average price. So it became pretty burdensome. Um, and back in, I think, 2012, no, it's probably 2014, I got with TC2000 and said, can we create something together here to anchor the volume weighted average price from any point. And since then, not only does TC2000 have the Alpha Trends anchored VWAP, you might be familiar with TrendSpider, TradeStation. Just this past week, it's on Yahoo Finance. It's on Ninja Trader. I'm sure I'm leaving a few out, but what we're going to cover today is what it is. I kind of described it a little bit, but why do we anchor? What is the anchoring bias that you might have heard from? Where to anchor the volume weighted average price from, and how to use it to make more money. So what we, with the components of the volume weighted average anchored VWAP are price, volume, and time. Those are the three most important things you can study in the market. It's simple supply and demand that we're looking at. Price is how we keep score. A lot of people say, well, the most important price is the closing price of the day, which is complete nonsense. The most important price is, where is it relative to what I paid for the stock? I don't care what the volume weighted average price for the year is unless I bought it on January 1st. I don't care where it is since the Federal Reserve unless I got involved there. But I want to know from my perspective. That's how we judge our success or failure in the market. Volume tells us the emotional intensity. For every buyer, there's a seller. So why do prices move? They move because the buyers are more motivated at certain times than the sellers, and vice versa. And time is the subjective nature. I was talking to Bubble here right before, saying, do you want to take some requests? And we may have time for that, but I said to him, a lot of times useless questions would fall into the camp of, what do you think of Tesla? What do I think of Tesla is, or any stock, is not a real question. A real question is, hey, Brian, I'm long from this price. I'm looking to hold for this time frame. Tell me the perspective to look at it so I can provide value. To me, that's the only way. Just people saying, hey, can you look at these 5 tickers? Okay, I can look at them. I mean, what? I don't know your time frame. I don't know anything about your risk tolerance. So let's talk, let's get back on subject here, which is, this is the traditional volume weighted average price for one day, where you look at it, and on that day it begins at 9:30 a.m. You can use it, of course, with pre and post market analysis as well. But it's traditionally, it's a measurement of, this is the average price the stock is trading at throughout the day. And as the prices move higher and more volume trades, it starts to, be in an uptrend. So we generally want to look at the market as the buyers are in control. Well, it's above a rising volume weighted average price. It doesn't mean you can just buy it anywhere, though. Some people use, standard deviation bands. I'm not a fan of that. But you still have to make smart decisions, such as, maybe after it touches the volume weighted average price and breaks this little high right here, you could buy it right on this little candle with a stop underneath that low right there. So you can find these low risk, high probability levels to get involved. On the flip side, here is a recent day in the Russell 2000, which has been a laggard, compared to the rest of the market. It had some more constructive action recently, but at the beginning of the day, the market gapped up this day, and then where did we find resistance? Almost to the penny, was right there at that volume weighted average price for the day. So again, it's a institutional benchmark, and because of that, it's also the basis for a lot of algorithmic trades, meaning that a lot of orders are trying to be filled at the volume weighted average price or better. So you've got these brokerage executing brokers who say, we will guarantee you the volume weighted average price for the day in doing this order of buying 100,000 shares of XYZ. So they want to beat that. They want to be just average, which is an advantage to us as traders because we're not trying to move 100,000 shares in a day. Maybe some of you are, but we're not, we're looking to make money, not just to be average. We're looking to say who has control of the market at any given point, and it changes throughout the day, and you can go crazy anchoring volume weighted average price on a 1 minute chart from any 10 different places if you wanted to, and I'll show you some of that as well. But it can be used on any time frame. You can find value on a 1 minute chart. You can find value on a monthly chart that goes back 10 years, and I will show you some of that. Where to anchor, and again, that's going to be one of the subjects we talk about, is really an art. It's not a science. So what we want to know, first of all, is where are we in relation to the volume weighted average price? Are we above it? Are we below it? And then what's the direction of that volume weighted average price? And then we want to start, looking at it as, if it has a rising volume weighted average price, we look at it as innocent until proven guilty. Below a declining volume weighted average price, sellers are in control, guilty till proven innocent. If the price is moving up and down, above and below, well, it's telling us we've got a trendless, sideways market. There's no value in trading that market unless you're looking for a market neutral strategy, which I'm not interested in. interested in trending and making money. So, if you've heard of the anchoring bias, that is, it's a heuristic or rule of thumb, basically, that we tend to, judge, something based on the first piece of information we heard. If you're with a real estate broker and they say, this house is $250,000, then you're going to say, okay, well, I'm going to maybe, offer 230 for it. If they said that same house was 300, you might say, okay, well, I'm going to offer 280 for it. You're anchored to that first price. That's where your mind gets set. That's why people love sales. That's why you look at it and say, hey, I'm anchored at this price of $7.99 for a year of alpha trends. That's the regular price. And then if I give you a deal, you're going to say, well, that's a better deal. So I'll take advantage of that. But what we want to look at is the way to look at it and think of it really is, it's similar to a dollar cost average. In fact, it's not similar. It's basically the dollar cost average. If you buy $1,000 worth of Apple on the 15th of each month through November 15th of last year, you would see that the number of shares is this orange line. So when the stock price is $153, well, you buy 6.5 shares. When it goes to 161, you buy less shares. And when it's at $265, you're only buying 3.76 shares. Well, what this is, this purple line, this is your dollar cost average. The dollars that you put into it divided by price that you paid, that becomes your average price, your volume weighted average price. And you get this smoothed out, but still trending higher. You're paying a higher price, but you're buying less shares as it rises. So that is your VWAP. And relative to your volume weighted average price of 202, you're feeling good at 265 and even better above $300 per share, obviously. The way that you look at a volume weighted average price on a chart is just like any moving average. A simple moving average, is every piece gets the same amount of information. Exponential is a speeded up moving average where it just gives a little bit more uh, emphasis on the more recent prices. There's no, to me, people ask me, what do you think is better, simple or exponential? And I always say, whether you use simple or exponential is really irrelevant because I'm never trying to buy at a moving average. We're looking at it as a reference point, something to compare price to and drill down to a shorter term time frame and see if there is, evidence of the theory we're looking for so that we can take advantage. So it's, kind of, again, it's irrelevant, but the moving averages based on simple and exponential, they're time based. They are, 10 days, 20 days, 50 days. Why is a 50-day moving average important? It's only important because people say it's important. Why does the 50-day moving average tend to act as support or tend to act as resistance like you see on this chart? Simply because a lot of people, myself included, grew up looking at moving averages and being told the 50-day moving average is important. So you get the psychology of, as it pulls back to a rising 50-day moving average, buyers start to accumulate more shares. Money comes out of the woodwork and says, I'm going to accumulate some. Short sellers slow down their activity, and it's supply and demand is what it is. It's always supply and demand, but it becomes a battleground. So whether you use simple or exponential, again, irrelevant. What is not irrelevant is where to anchor from, because the volume weighted average price can give you the opportunity to look at the market. So this is one that I was in Las Vegas at the Traders Expo last November, and I used this chart on the left as an example. This is a chart of gold, the GLD. And I said, here's a 50-day moving average. The blue one is the simple. The black is the exponential. And really, they're not offering much value there. What I said was, here's the volume weighted average price from the beginning of this move. This is where I think we're going to find support, and it's more likely a buy here than it is to get short, because people look at it and say it's below a declining 50-day
Mm.
moving average. More important, it's touching the average price is there. That's an important battleground. And you can see on the right chart, this is through Friday, that the stock, bounced, it came down, tested it again, and then this bigger rally, moved from there. Here's another chart where, do you want to look at the last 50 days, simple or exponential, or do you want to look at the average price since this pullback, since the peak? So the stock peaked up here, and then it found resistance right at that VWAP, found resistance again. Now this is the type of thing where you say the direction is still lower, but it's starting to flatten out. Now maybe it's in a position to be able to move higher from. This is the NASDAQ, the Qs, through Friday also. And December 16th, we had a gap event. I put a volume weighted average price on that, and we saw that it kept getting defended. Well, then it ran much higher from there, so I put a volume weighted average price here, and it really didn't provide much value, but it came down to that blue one pretty close again. Now we had a gap last week, and look at how, the last 4 days of trading, the NASDAQ has held above that volume weighted average price. So from that gap, the average price here is 228 and change. I don't know why it says my internet connection is unstable. I hope it's not creating a problem.
It seems to be okay here on this end. So
Oh, okay. I
yeah.
just got a message there. Um, anyway, so if the Nasdaq starts to hammer on this and it starts to flatten out, I would think the next level that it'll come down to and be tested as support would be the volume weighted average price from the most recent higher low. So this to me is the most recent higher low, and that would be found right here at about 226.80ish. Below that, we can take that not only from this low, but from this peak, and you see those come together at about 224. So they become levels of interest where we want to say, okay, I can manage risk based on this. If I bought on that gap, now I want to have my stops somewhere, under that, probably that 228 area. This is a stock that I was looking at here. Again, this is, I think it's PWR. I forgot, but this is also through Friday. And you can see that, here's a 50-day moving average. A lot of people say you buy the pullback to the 50-day moving average. And then it started doing nothing. And then it started, the 50-day moving average started declining. Well, more important than that was, one, we could take, a volume weighted average price off of this low, and you can see how it found buyers on that first pullback
Mm.
and trying to hold support, which it didn't do. But more importantly than that, if we take a look at, from the beginning of the pullback and put a volume weighted average price there, you can see the average price was declining. So I don't want to be a buyer while it's still declining. I don't want to be the buyer over here at the 50-day moving average, because the average price is still declining, meaning there's negative sentiment that the shorts who decided they were going to get involved up here are in control. The sellers are in control. They're more willing to defend it And you can see that that volume weighted average price was tested twice, and then the stock broke down. So it gives us these hidden levels of support and resistance. And again, you also want to be aware of what's the direction of that. If it started to flatten out, then I would be looking for this to turn higher and most likely look to get long. Let's say it started turning higher, flattening out. Maybe I would have bought above this peak with a stop under this low or this low right here. It's all dependent on your time frame. So you have to ask, what is a measurable event? Where do we want to anchor from? That again is the science, the art rather, not the science of this. So when we look at, this was Apple. I put this together a while ago, and it's still relevant though, because we had this big gap down. And when you have a big gap, put a volume weighted average price on it. Well, the buyers regain control of the average pricing after day number 4, and then they maintain control. So as the price gets further away from that volume weighted average price, we want to add a new one. So for instance, from this earnings report, and you can see it held, it held, it held. It broke down one day, but the price was still higher, and then the stock ramped higher from there. So then we look at what's the next place to anchor from. Why not from that shakeout? And from that shakeout, you can see it was tested and ran higher. So then we want to put a volume weighted average price off of that next test. And you can see now we can use this, these successive volume weighted average price levels for stops for longer term holds. If you did buy down here, maybe your initial stop goes under these levels, and then as it gaps, your stop goes under that low, and then under this low, and then under that low, and then it has this next run. So you anchor from here, and your stop goes under that, and maybe you're raising it up underneath the volume weighted average price. This is Bitcoin. This is through, an hour or so ago. I think I threw this slide together. And here is, the high from 2019 is in red. Then we had another significant high. So I want to do it from, significant levels where there's price memory. This breakdown was important. This low was important, and this low. So you can see below us, 8,000, we've got a lot of, uh, uh, confluence of these volume weighted average price levels, and the stock of Bitcoin is stair stepping higher. What I'm expecting here is most likely it's going to continue a little bit higher. They'll pull back and test this volume weighted average price off the peak, and if it can hold there, then you're going to get another push higher in Bitcoin. So again, this is something I've been doing for a long time. This was in 2007. I wrote an article about, the volume weighted average price holding is, hidden support and resistance and reversal points. So it's again, it's a just another technical tool. I think it's the best, most important technical tool. I might be a little biased here, but it's supply and demand. Who's in control from any point in time? And look at how this stock, had this big washout, and then you put a VWAP on there, and the buyers defended. Now that volume weighted average price flattens out. It acts as resistance. This tells you want to be short against this volume weighted average price with a stop a couple pennies above that volume weighted average price. Like any level of something that tends to act as support or resistance, then the more often that it's tested, the more likely it is to fail. And in this case, kept holding, and then it failed. This might have been Amazon, I don't remember, or Netflix. Um, this is Amazon right here through Friday, and this is where this was my bullish thesis for Amazon as I went on to Yahoo Finance about 3 weeks ago, saying that it's above the volume weighted average price from that peak, and it's holding above the volume weighted average price from the most recent low, and the December washout it's holding above, and Amazon continues to move higher. At this point, you would want to put another volume weighted average price right on that move, and we'll take a look at that. In fact, why don't I just do this? I'll stop share and go over to the live charts and share
Great.
that. And Amazon, we can take a look at right here. So we had a little bit of initial, back and forth battle for control after a big gap, which isn't unusual. And then the buyers defended it here, a couple times, and now that VWAP is heading higher once again. So clearly, there was a little battle for control in here for 2 days. The buyers regained control, and now the average price since the event, a measurable event, earnings, that's what caused this big move. So we want to anchor from earnings reports if they have a big move in the market, if they're the catalyst that causes change, which in fact they did here. And now at this point, I think you could probably, if you're trading Amazon aggressively, then your stop probably goes at about 2030 or so, 2035. So you can see how, it um, might not be immediately useful as support and resistance, but it starts to shake out, and you can see that the buyers regain control and where to measure from. And one of the best places to measure from is, without a doubt, IPOs, because everyone
Oh
has the
yeah.
same starting point. You know this. One little trick here, though, is when we look at this, this is beyond when they first came public as a 1 minute chart. What you'll notice, though, is see the huge volume on the very first candle. What happens there is, the stock opens, and they're setting the price that, I think it came public at 27, opened at 45, or something like that. But that first print was just a bunch of buy and sell order matches, market on open. As soon as the market opens, we want to sell 300,000 shares because we got allocated a bunch, and that helps stabilize and find that price discovery. So it's not really actual trading usually. So if you anchor from that first, you can see the purple here. But if you anchor from the second minute where the real trading begins, you can see how right here it came down almost to the penny. So how do you use that? Well, it pulls back, goes sideways a little bit. You buy on this candle with a stop underneath that candle.
Mm.
And then where do you go from there? Well, here's where we were 3 days later. So this is the second day it gapped up. And then the third day it gapped down, came right to the volume weighted average price from the IPO. So these are 5 minute candles at this point. And that's where the buyers stepped in once again. It gives you, a reference point that says there's nothing else there. There's no 50-day moving average there. There's no 10-day moving average. There's nothing. Here we can see at day 6, once we tested that volume weighted average price on day 3, I put a volume weighted average price on that, so we can get more aggressive about risk management and maybe sell as it breaks underneath this volume weighted average price. And then at that point, you'd be looking for it to pull back to the VWAP from the IPO and maybe hold as support. But it didn't hold as support, so you wouldn't re-enter. Then you take a volume weighted average price off the peak and say, from the peak, what's the average price? And it's declining. Here we can see, a couple months later, now we've got 3 important events from the IPO, from this gap higher, and from the peak. Look at how that volume weighted average price from the IPO was defended again, again, again. It turns flat, it breaks down, and that's where it really became the sellers were in control. And this is, a couple weeks after that, where this became a measurable event because that was a gap with news. That was when they were, going to test them in some McDonald's stores. And then, since then, and again through Friday, look at how the volume weighted average price off the peak in here, that's what we're testing. But more importantly, the volume weighted average price from this gap, you can see on this big run from 70 to 135, it came almost perfectly to that. And that's where the sellers regained control, at least for 2, 3 days. And it came down, 30, 25, 30 points, rallied up, tested again. Maybe we're headed up to test that again now. We don't know. We'll see what happens. Here's one idea. This is an IPO from last year. This came public in September, and it's called Cloudflare. The one caveat here is they have earnings due on Thursday, I think, so be aware of that. But what I did is simple here. I drew a little trend line in off these lows. I could have drawn one off that peak, and you can see a nice little triangle forming. But here's the volume weighted average price of the IPO. That's the purple line. So that's the average price that people have paid, about 17.90. Now, it wasn't necessarily good support or resistance, but then we had the volume weighted average price from this peak and then from this low. And look how they're all coming together now in this area, even from this peak and this peak. So that one is flattening out. And I think if it gets above this level here, which is $18.40 per share, to me, above 1840, this looks like a good swing trade opportunity. But where would I be wrong? Where would, I think 1763, that's below this little low right here. Now, maybe that's a little tight. Maybe you would want to go under here. Maybe you're going to put your stop under here. I don't tell people what to do. I say these are the guidelines which I think make sense. Make the trade your own. Do what's right for you in your time frame. That's what matters most. Here's another one that looks set up, which is APPN. This one I had put on Twitter actually on this day right here. It gapped up the next day, so I didn't chase it. And it sucks when that happens. This is that on the right, by the way, this APPN, that's a 30-minute time frame. On the left is a daily time frame. So I have, the beginning of this move here, the peak of that move, and this low. And you can see they all came into this area and were tested. So that becomes, and then that's what that, so this green line here is still the same green line, but on a 30-minute time frame. So that became that pullback low. So at about this point, we put a volume weighted average price on that, and it's rising, and you can see the buyers are defending it. The buyers have regained control over at this point. We had that little shakeout. Now I think APPN, the way I want to look to play this, starting tomorrow, is above 5406. That's this little peak right here. That tells me it's broken above this little consolidation, and I'm going to put my stop under here, which means that I would want to be a buyer above 5406. My stop would be 5246, which is 2 pennies below that low. Now maybe it breaks down. Who cares? So what? If it breaks down and we don't trade it, it doesn't cost us anything. That's it's an opportunity. That's all that we're looking at is how do we look at these issues and say, where is the opportunity now? How does this help me to formulate my plan so I can have as low risk as possible with great potential upside? I think this stock could head north of 60 and go test those highs from last year. Why not? We're in a great bull market. So kind of a conclusory slide here, and then we'll take a look at some charts. I've made it through that pretty quickly. We'll take questions and look at some of the stocks that you guys want to look at. I hope I've made the point that it's useful on every single time frame. I don't care if you're looking at weekly charts, daily charts, 30-minute charts, 1-minute charts. It's a quick, easy way to say from any point in a chart on any time frame who's in control, the buyers or sellers. And we want to anchor from those, key emotional points, such as a breakout, a breakdown, a swing low or a swing high from the Federal Reserve, from anything that causes a big volume event typically, and that's typically associated with big emotion. So year-to-date earnings, any kind of gap. There's a lot of ways to use it, and I would say use it. Whenever you feel the best way to use it. So there's some I'm sorry, on TC2000, they have the point and click. TrendSpider has the point and click, and that's the right way to do it because that's how you can learn. Is not by typing in, okay, on December 18th at 9:46 a.m. Then you got to redo it. You're able to really experiment with it and see who has control. So as Bubble has said, I've got a book, Technical Analysis Using Multiple Time Frames. If you're interested in alpha trends, come take a look, alphatrends.net. There is a special. I anchored you to $7.99 earlier. Uh, so this is clearly a great deal. Only price pays. Make the trade your own. Do what's right for you. The thing that Bubble's doing here, exposing you to great information about different aspects of technical analysis. Some people might say, look, wait a minute, what's he doing? He's showing us something new every night. And the point isn't that you should use everything. You're not going to look at 40 different things. If you are, trust me, you're doing it wrong. The point he's trying to do is to expose you to a lot of different ways of looking at the market. And then it's up to you to choose and say, hey, that VWAP makes sense. Or you might say, no, I don't like VWAP. I like simple moving averages. I'm a simple person. That's what I do. That's what you should do. If you have a method that works for you and it makes you money, don't listen to other people. Have an open mind, but don't let anyone tell you that you need to use the VWAP or this moving average or the MACD or whatever. Keep your mind open to new ideas, and I think it's great how Bubble's doing this for you guys to bring you all this information consistently and pick and choose again what's right for you personally. So I'm gonna that's the end of the formal part here. I don't see how I can get the questions on there, so maybe you,
Awesome. Yeah. If it's all right with you, I'll just I'll run through just questions that folks have for you, and
sure.
just kind of read them off, and just kind of go one by one. We probably won't do too many chart requests tonight. Maybe like one or two or something like that that look interesting, and but we'll just try to hit like some questions on VWAP, things like that, if
Yeah,
that's okay with you. It seems like there's a few coming through. So
definitely.
great, awesome. So thanks so much, Brian. That was awesome, and really appreciate you sharing this with us. I know I learned a ton. I actually, before we get started, I do have one question for you, just off of my. So, what are your thoughts on the shorter term, maybe even the long term timeframes of overshoots or undershoots of of an anchored VWAP?
Well, so for instance, here we've got the SPY on a 30-minute, and I think that you've got to look at them as the way I was taught. For instance, trend lines is from a friend of mine, Larry McMillan, who the options guru, and
Yeah.
and what he always said was you want to draw trend lines with a crayon. You don't draw them with a straight edge and a sharp pencil. There's going to be porosity around them. You don't, and sometimes it will be the exact penny. It's amazing how it will be the exact penny that it'll come to at times. But what I think is most important is to say, okay, this is an event. This gap was clearly an event that we want to be aware of. So if I anchor from there, and it comes down through it briefly here and here, well, we're not looking for it to be perfect. We might look at a 5-minute time frame and say, okay, here is that same volume weighted average price. Um, and actually, let me just do that over and go like this so I can get it right on there. So it comes down slightly through that level, but I think that what you want to do is say, okay, it's gone through that by a few pennies. I don't expect it to be perfect. Maybe I'm going to buy above here with a stop under there because I'm still giving the benefit of the doubt to the buyers because the direction of that
Right.
volume weighted average price is still higher. So that's what's more important to me is what's the direction since that event. And if it's still rising, then that's what I want to be interested in.
Got it. Yeah, that makes sense.
So even like we could look at, since the high 2 days ago, and I'll just do this to, color it red because that's a high. You can see that the high that we saw or the gap open on Thursday, well, on Friday, the market ran right up to it. And that's where the sellers emerged was at the volume weighted average price from that peak. So let's do this actually. So, not perfect, but it was still declining here. So if you're a scalper, it doesn't mean you short it right there. It means you short it as it breaks back down through that level with your stop above here. It does this again. Maybe you're adding to your short, or at this point, as it continues to break down, you lower your stop. Then as you get these lower highs, you lower your stop here, and on and on. It depends, as always, on what's your personal time frame as well.
Nice, got it. And then I got one more question now. So so you basically came up with the anchor VWAP. You got with these guys. Really, how do you anchor this? How do you anchor this VWAP? And so my question is, in your experience, like with the VWAP itself, or even with the anchor VWAP, now that it's been out there and exposed to, algorithmic trading and all that stuff, do you find like that there's a philosophy like because that's out there with institutions? Like I've heard before, and I've read it before that with the VWAP that some hedge funds are not allowed to buy unless it's under the VWAP, and vice versa, they're not allowed to short unless it's over the VWAP. And do you see is there any correlation with the anchored VWAP?
Well, sure, and absolutely, there is, some people make their decisions based on, on their investment committees will meet and say, okay, this, next month, here's what we're going to do. We're going to start to pare down our holdings, or we're going to start to add more Amazon because of these earnings report, and we want to stay at least doing, the VWAP or better. So there'll be different, you have to look at it two different ways. How does a momentum player look at the market? You want to see it above the rising volume weighted average price.
Right.
That's the
Yeah.
momentum.
Yeah.
If you're an institution who says, listen, we want to buy this stock over the next 3 months, and we want to buy it on days where it's weak. We want to pay less than the volume weighted average price. So anytime it's below the VWAP since the beginning of uh, our buying campaign, we're going to go in and defend it. And we might go in a little bit more aggressively if it's below VWAP and it's at the rising 50-day moving average, because that
Hmm.
often does act as support.
Sure.
There's no, and there's so many different ways, to the finish line. And even, at the institutional level, you've got the shorts and the longs involved, obviously, on every stock at every time frame. And you've got, different reasons. Some shorts want to short on momentums. Other shorts want to, get involved as it is, two standard deviations above the volume weighted average price, looking for mean reversion. But the fact is that it's a huge piece. The volume weighted average price is a large component of most of the algorithms out there. So it does play a huge role, in prices, tend to, when it gets towards that volume weighted average price, you see that activity picking up from the longs and the shorts, momentum or uh, value. So it becomes a magnet for activity. It becomes a key battleground, like a 50-day
Hmm.
moving average becomes a key battleground. And then our job is, discretionary traders to say, how do I put these pieces of the puzzle together and say, okay, now we're testing this level. It doesn't mean it will be support. It's what I always like to call a level of interest.
Mm.
Now I want to get down to a shorter term time frame and see if there's actual evidence of my theory here, and then I can commit. So I want to anticipate all potential scenarios, but wait for price confirmation on the time frame I engage before I actually participate.
Got it. That's awesome. Good. Well, thank you. So yeah, so I'm just gonna run through some questions through here. So I'm just gonna touch on everybody here. Enlighten me. Thanks for tuning in, Mike. What's going on, Christy? Thanks for tuning in, Matthew. Thanks for tuning in, man. Yep. Good evening, John and Brian. Dave, what's going on? Good. 5x5. Michael, good to see you. IT fun. Matthew, awesome. Good. IT, good. Nick, awesome. FM, Sako Taco, what's going on? Eric, thanks for tuning in. Netfry, Blood Broker. Let's see. Jay, Sarah, Levi, what's going on? Okay, so I got a question for Brian. What do you prefer? Well, I think it's pretty clear. What do you prefer, anchored VWAP or standalone VWAP?
Anchored.
Yeah.
I mean, but I look at a 1 day volume weighted average price every day. I often look at the 2 and the 3 and the 4 day. But to me, it's more about the, from an event. So I do look at, if I'm looking at, scalping the S&P 500, let's say I'm looking at a 1 minute chart, I might do something like put today's volume weighted average price on there, and then as it breaks down, I might say, okay, well, from this point where it broke down, I'll set my stop above that. And then, so if I shorted right in here, I might cover right in there.
Mm.
And then, you could say, okay, well, maybe another person is saying, I'm going to get long at this point with my stop under here initially, now my stop under this low. And it's not below the volume weighted average price, but when the volume weighted average price, and this is at 2:15 p.m., When that volume weighted average price flattens out or turns lower, then I want to get involved, or below the previous low. So if it rallies back up at this point, I would say raise your stop to here. At this point, raise your stop to this level if you were involved, over at this where the buyers regain control.
Hmm.
So,
Hmm.
again, any time frame, it's useful. You can go to the weekly time frame, and here, from the that's from January of last year. If you take a look from the washout low in December, you can see how that became important right here. You can go back to some of these volume weighted average price levels and still find that they're relevant. That once you get this test, and here's a weekly chart. Look at how
Wow, amazing.
from 16 we came right, that's where we bottomed, and within, it wasn't perfect, but
No.
it definitely was a level of interest. And then maybe you say, okay, well, what was that on a retracement basis from this low to this peak? Okay, well, 50%, maybe that's another component of what you're looking at. But it's clearly, gives you value. And that's the thing, is that when you look at the ability to just click anywhere. So some of these platforms, you have to say,
Yeah, there's
okay,
a
I
script. There's
want
a
to
script
do
on Thinkorswim where you have to type in the date, the time, and all that stuff, and it's
right.
that.
You've got to
Yeah.
line it up. You can say, okay, what day was that? What
Oh yeah.
time? And by the time you do that, you're tired of doing it. You're like,
Right.
I don't even give a shit. I've tested, too many of these, but doing it this way, you say, well, was there anything significant there? Well, look, from that gap, yeah, it did become important. Look at how important that was. And I just grabbed that. I didn't, have to go time, catch the time and all that stuff. Um, but it's a great tool for just looking in, and playing around with.
That's great. That's TC 2000, and then you also have Trend Spiders has the point and click too now.
TrendSpider has it as well. Yeah.
That's great. Awesome. Cool. So let's see. So Ari, thanks for tuning in. Paul, what is okay? So this is I think you've answered it, but I think it's a good question. So what time frame is best for the VWAP or the anchored VWAP?
Every single time frame.
Exactly. Yeah.
I mean, yeah, the time,
Depends. Right.
whatever your time frame is. I mean, it tells you the true supply and demand, who's in control from any point. So I use it, as I've said, on minute charts, on weekly charts. I might have something still on here. No, I don't.
I saw you
I'm a
post that one
monthly.
on Twitter after like the Fed minutes. You had like the 2 minute chart that time. That was interesting. You're like right after
Yeah.
the Fed, it's like came back and tagged it and then flushed.
I mean, you can't make this stuff up. Where do the buyers
Yeah.
regain control off of that? How about from this low, or this peak? Look at, to me that says, from the beginning of the 2000 decline, where did the
Look at that.
buyers truly regain control? Not where was the bottom, but where did we actually regain control?
Hmm.
The average participant over these 2.5 years was now making money at this point. The average short
Right.
from that point was losing money. That tells me that's where the buyers regain control. So I might even go in here and say, okay, well, let's put a VWAP on that, because that gives us a little bit more value. And you can see here that, in fact, by anchoring it where the buyers regain control, that
Sure.
was tested and, continued to move higher until it turned lower and started breaking down. So then you can put another volume weighted average price off of this peak and say, well, and that's why I start to color
Yeah.
code, because you start to look at it and go, wait, which one's which?
Right.
So here's where the buyers officially regain control from that peak.
Nice. Great. Hey Ernesto, what's going on? Thanks for tuning in. Godwin's got a question here. So for Beyond Meat, IPO day one, could you reiterate on the thinking behind skipping the opening 1 minute candle and anchor the view app to the start of the second minute?
Yeah, because the first trade of the day isn't really, it's not an open market trade.
Yeah.
It's not buyers and sellers. It's a negotiated price on the open. The specialist takes the order book and says, I have got 1 million to sell at 40 at 50, but I've got 1 million to buy at 45. where do I start lining up the buys and sells in between there? So they're setting that initial price for trading, and the market opens, and you'll see it opens. The volume might be 2 million shares. The opening print will be 2 million shares. Well, that first volume bar is typically the heaviest you will see for that day, and for many days to come, because that was, again, the negotiated price. So after that first print, then you have actual buy and sell decisions being made by people in the market, and that's what we want to know, not the people who. So it just gets skewed by that first opening print. I'll tell you what I do is I put when I'm looking at an IPO, if there's an IPO that gets people excited and it's in the news, and they start to uh, you know Casper was one this week that
Oh yeah.
everyone hated it, right? Um, but here we can look at from the beginning of that day. Here's a
Well,
one
this has
minute.
been the last year is the year of like the year of the IPOs that were just like, what is going on? That type of thing. So
So
yeah,
here,
here's Casper.
yeah, there's that first volume bar, and you won't see a bigger one, and and it dwarfs the other ones. So in this case, what we would do with Casper is to say we'll put one here, and I will also put one there. And sometimes it makes a difference. It did in Beyond. So here we can see, that's from the second minute. And in this case, it was actually the volume weighted average price from the first minute that mattered more. So I use them both, and I want it because I'm saying I don't know which one is going to be the most important. So I want to look and have those visual reference points on my chart so I can see what is the market telling me is more
Hmm.
important.
Nice. That's great. Let's see. So good. And then I had one other question there. Okay, so good. So not too many questions. I mean, you covered a ton in the presentation. So that's great. Lots of questions there. And of course, this will be recorded, so anybody can go back and review those. There's two charts on here. So I don't know if you have time to look at two charts, but I think they are pretty significant because
Okay.
both had some pretty big moves recently. Um, so one is FedEx. I thought that was interesting because that did it held a key level for a while and then gave a huge pop on Friday. If we look at the daily chart on FedEx, I think that'd be great. I'd like to see that too.
Okay, so here's a daily chart, and I have a 50 and a 200-day moving average on there, and I'll look at events like this, from that gap lower. Well, initially that held the buyers, and then now it's still declining.
Mm,
I think that it's likely that if this move continues, it probably goes through the 50-day moving average, gets people excited, and halts near this volume weighted average price. To
gotcha.
me, it's a stock in a downtrend. It's guilty till proven innocent. I don't
Sure.
see any reason to own it.
Right.
Um, maybe the volume weighted average price from that event or from this low. But just looking at this chart, number one, it's a stock that's in a prolonged downtrend. Um, and then when you look at the daily chart, I just see a big choppy mess that just
Oh yeah.
tells me I don't even want to look at it. I want to look at stocks where you can look at it and it makes sense. That's what I'm looking for.
Nice. And then one more, and this is pretty interesting because this just came up pretty big too. So Ernesto's got one on here. WWE.
Okay,
It could be
that's
interesting. I know
another one that's been.
Amazon getting involved, that type of stuff. So that looks like an
So you
interesting
can
one.
see I've been looking at this one previously.
Yeah.
It's in a downtrend. It's a piece of garbage stock. It is, if you look at just the most recent news, we're below that. Sellers are in control. I think you look at it and you say it's guilty till proven innocent. Maybe we could look at a weekly chart. And actually, you know what? I did this on Friday. I
Sure.
was looking at it saying from this peak, and look how we're coming right down to
Isn't
it.
that
So
something?
maybe the worst part is behind, but it doesn't mean, if they don't scare you out on the way down, they'll generally wear you out.
Oh yeah.
And and I think it's more likely that if it does find some buying in here, it gets some bounces, but it
Right.
probably does something like this and just wastes people's time when there's stocks that are trending out there, that have to me, it looks like this move is likely over to the downside, but again, that
As
doesn't
long as
make
it's
it a
gonna
buy.
bounce like it. Right.
Yeah,
Exactly.
there'll
Exactly.
be
Good.
there'll be some there'll be some nice bounces, but it doesn't mean it's gonna sustain.
Nice, good stuff. NetFry, thanks, Brian and BH. Great talk, Christy. Thank you. AM vids, we're going to talk a little bit more about it, but I think this is a good question for Brian too, and then we'll wrap it up. So what other techniques can you combine with the anchored VWAP? So we've talked in the past about crossovers through the VWAP, things like that. Have you, Brian? Is there anything that you can share or touch on that that might be interesting, that like a combo like Fibonacci's or something like that that you've experimented with or seen before that are effective?
Yeah, I think anytime that you have, so the SPY did that, and I was pointing to no, actually, so Tesla was one that I was looking at that I put on Twitter this past week about the Fibonacci off of the. Let's see, let's just take all that stuff off. I was looking at this
Oh, Tesla. That was good. I
at
was like,
38.
nobody's asking about Tesla. Someone's got to Tesla on here. This is
Yeah,
great.
so I think it was so this volume weighted average price, which was the week to date. Yeah, so that was the week to date. I had put this on actually on Thursday on Twitter, and I said, here's a level of interest. It's at a 38.2% retracement and the declining volume weighted average price for the week.
Mm,
So that becomes a level of interest. It doesn't become a level of action in my mind until it does something more like this. So, this is, the volume weighted average price from that low. And you could have maybe guessed that that was going to be the high. And certainly you can see that this volume weighted average price was defended several times on Thursday and Friday. So you could have traded, with it against that. Again, using trendo, it's lower highs and lower lows. So you don't just get out because it got above the VWAP. If that VWAP is still declining, you say, okay, well, I'm going to use once it breaks back up through the most recent relevant lower high for my time frame, then I will cover. And on the opposite, if I'm looking at it saying, if I got long here on Thursday morning, let's say as it broke above this opening range, with my stop under here, I'm going to hold it as it, until it breaks a lower low. You might have gotten out,
hmm
before the break of the VWAP, or maybe you said, well, I'm going to give it to VWAP. There's no perfect way to use any technical tool.
Yep.
There's, you can make a case in hindsight and fill up a book or webinar with nothing but perfect winners, but that's not real life. Real life is there's uncertainty at these levels, and that's where the art of trading in being a trader and being skilled and objective becomes the more important level than being a great analyst who just says, wow, look, I saw that VWAP. Okay, what did you do with it? Did you make a trade? Did you manage risk there? And if you
Right. Right.
find these places where you say, okay, it's combined with, who trades on Fibonacci? Well, a lot of people do. Is it because there's magic to Fibonacci numbers? Some people will say yes. I'll say no. It's because a lot of people have been trained to say, hey, it's at a 38.2% retracement. I'm going to short some here. And other people say, hey, it just ran hard up to the 38.2% retracement. I'm going to take some profits. So if you understand the
Right.
psychology of why people are making buy, sell, or avoid decisions at a key level in the market, based on a technical indicator, if they then kind of come together and you see a confluence of indicators in the same place, it gives you a little bit more confidence that here's something that I can kind of believe in a little bit more.
Exactly. That's awesome. Well, great stuff, Brian. Thank you so much for tuning in tonight and for presenting this to us and helping people, see a different side of the market, another way of looking at things. And I really appreciate you mentioning that. It's like just because something hits the VWAP doesn't mean something's going to happen, and it all comes down to risk management. And it's like if your stop is right at the VWAP, and you're getting crushed on it or whatever the case is, right? You might want to reevaluate, the trading strategy there, right? We don't want to. Nobody should get hurt just because something moves slightly through a level or is testing, right. That's a really big key for traders out there. So very, very important stuff. So
There's no perfection in the market. It's all art. And saying, if you're looking for the perfect indicator that you can trade against, just quit now. You'll never find it because it doesn't exist. The best performing funds out there, they have their down years, they have their down months, they have their down days, and they question Why are we still doing what we're doing the way we're doing it? Has the market changed? That's human nature. It will always be that way. There is no perfection in trading.
And it's real. I mean, there's hedge funds that just went insolvent trying to short Tesla.
Yeah,
I mean,
it's a
I mean,
beautiful thing.
isn't it? That's amazing. But great. Actually, there's one more chart if you have an extra minute, and this is a good one because they have earnings this week, and it's a big player out there, Roku. I don't know if you have any levels up for that, and we'll just wrap up after that if you can get to it if you have time. If
Yeah,
not,
yeah, sure.
that would be an interesting one to
So
see.
it's kind of, I put it kind of in that same core category of, it's a messy chart, but
It
it's
is.
clearly, it's the sellers are in control. We
Mm-hmm.
have a clear, just looking at, lower highs and lower lows, that's clearly a pattern here. So we can go back to this level and say, if the stock gets hit hard, um, is it going to hit one of these volume weighted average price levels? So now it's at what has been pretty important, this gap, right? So we can see here it went through it, but now we're kind of testing it again.
Mm-hmm.
So, where do the buyers regain control? Well, it gapped down here, and you can see where, that ties the 50-day moving average now as well. So you can see I've got, I've got a 20, 50, and 200-day moving average on there. I do these videos on YouTube every Friday that people can look at how I anchor, where I anchor, and I look at a 5-day moving average on an intermediate term time frame. So on a 30-minute time frame, that's that orange one there.
Mm-hmm.
But again, similar to FedEx, I look at a stock like this, and it's to me, one of the questions you have to ask is, does it suit your personality? And to me, no, this does not suit my personality. Not with these types of moves.
Right.
It's just too nutty for me. That's my personality. Other people might look at it and go, "Wow, look at that. That's great. I can sit there and just trade Roku, and I'll go down." And if you're going to, you can't trade it on a 30-minute time frame. I don't think, because it's just completely random looking. And you can't really trade it on a 10. You've got to probably be a day trader in this stock. And then, looking at it and saying, maybe avoid the first half hour of the day. And it's, what's the personality? Does the stock match your personality? To me, this one definitely does not match my personality. As I showed with the two setups, this NET, this is more my personality. It's calm. It's if it looks pretty simple that if it breaks above here, because we're above all these key volume weighted average price levels, that it's, the buyers are likely to quickly regain control, and a first target might be a trend line that looks like this here up near 19. Um, and maybe it goes up through there, does this, and then continues higher. There's a pretty good size short position in there. SDC is one that I'm currently in. It held the volume. Here's the volume weighted average price from the IPO. It tested it here, and now it's above that volume weighted average price. This past week, we saw that from this event, that volume weighted average price has been tested, and it's above the VWAP from this peak and any other place on the chart. So the average participant on the long side is winning, and there are 5 million shares short this stock. They can't be feeling too good about it.
That's right.
So
That's right. And that was interesting. The last question I saw here was about psychology and VWAP, and I mean that's it right there. I mean, I mean, what do you think the psychology of the people that are short,
exactly, and it tells you the average price, the average short, since it's come public, is at $12 per share. And here we're at
Nice.
1454. So the average short is losing money. Now you can get more detailed about that, of course, and
Right.
really find out, but that's just a quick thumbnail estimate.
Sure, exactly. That's awesome. Brian, guys, Bose, awesome, great stuff. Thanks for tuning in. Great questions. And thank you so much, everybody, for tuning in tonight. And Brian, thank you again. We've got the link to your website in the YouTube description, and that'll stay there. And also a link to your book in there with also the smile before it, so folks can get your book and also donate to their charity of choice. And great stuff. So good. So thank you again, Brian, so much for tuning in. And it's been very educational and awesome. So it's been an honor to have you. So thank you so much.
Okay, well, glad it was helpful, and keep doing what you're doing. You're doing a great job for the community out there, Bubble.
Great. Thanks, man. Have a great night. And thank you, everybody, for your support. And remember your risk first and stay safe. So you can stay in the game. And I'll talk to you guys soon.